Hi Mortgage Heroes, I'm Brian Landeros filling in for Andy Cruz, and this is Monday Mortgage Minute. Last week, we got more of the same from Jerome Powell. Tuesday, while giving remarks about the economy and policy, he reiterated the need for the Fed to remain focused on price stability, but also made it very clear that the Fed will not become a climate policymaker. No big surprises, so no big changes leading up to February 1st Fed rate hike announcement. CPI data that we kept a very close eye on came in exactly as projected. It's not bad, but it's also not a great signal that inflation is reversing course, and consumer sentiment was not earth-shattering. Collectively, this means nothing was startling enough to shake up the Fed markets ahead of February's Fed meeting. With that, let's go into this week's market outlook. Monday is actually a bank holiday in honor of Martin Luther King Jr. Day. No banks are open and the markets are closed. The real fireworks start Wednesday, January 18th, when we get all PPI data, month over month, year over year, and core PPI all come out before the markets open. If this comes in better than expected, then the case may be made that inflation may be tapering off, flattening, or maybe reached its peak. Remember, the Producer Price Index is a lagging indicator, but projections of the future consumer expenses that end up in our Consumer Price Index. Keep an eye on all things PPI this week. Higher expected is bad news, lower than expected will be treated as great news. And there's even more important news on Wednesday. This week, we get the latest in retail sales. Remember, we just talked about consumer sentiment a minute ago. The question we're hoping to answer is, will retail sales numbers reflect the same attitude we just got in consumer sentiment, or will it conflict and create confusion in the markets? And then, really important data for us to know about mortgage and real estate is the NAHB Housing Market Index, the National Association of Home Builders. This monthly reading is a survey of about 900 home builders which asks respondents to rate relative level of current and future single-family home sales. Any number above 50 is a favorable reading, but this index is getting clobbered month after month after month, falling from 83 a year ago to 55 of July 2022, all the way down to 31 in December, just last month. So in a year's time, it plummeted from 83 to 31, an unheard of 50-point fall from grace. Any turnaround in this number would be very welcoming news, but I wouldn't be surprised if this eventually bottoms out in the low 20s or high teens. Yikes. Thursday, January 19th, we get unemployment claims, and boy has this been all over the place. Not to mention there was a recent revision that delicately admitted the government overstated jobs growth by 1 million jobs. But oh well, it's not like we're making monetary policy around here based on actual data, right? And we round off the week Friday, January 20th with existing home sales. This is another interesting case of data because it has also been declining month after month after month for well over a year. At one time, it posted 6 consecutive months of readings of 6 million analyzed sales, but most recently posted an analyzed reading of 4 million in December. That's just last month, and it's 33% decline from the most recent high. This is another big black eye for the housing industry as a reflection of the overall economic impact monetary policy that makes its way through the nation. So what's all this mean for mortgage rates? The markets are going to continue to gather all data they can leading up to the next Fed rate hike decision and press conference, February 1st. But if you need to make the right step in mortgage and real estate in 2023, it's imperative you get started now. As we've been discussing, rates will likely hover in the same range we're in for quite some time until something obvious shifts sentiment and money in a defined direction. Until we start seeing progress made to reduce inflation, expect elevated rates are what we are contending with. That being said, there's a lot less competition in this market, and if Home Builder Index is any indication, there's not a lot of inventory coming to the market anytime soon. Therefore, prices could stabilize or lightly correct versus crash and burn, and someone else's cold feet could be your opportunity to get into your dream house in 2023. If you haven't heard about the 3-1 buy down yet, that's the focus of this week's podcast coming out in a few days, where we talk about how people are using it today to win in the market. So take a listen and see if this is something that can help you achieve home ownership in 2023. Thanks again for tuning in to Monday Mortgage Minute. Remember to like, subscribe, and turn on notifications so you can see the show right when it posts each week. Share this video with someone you care about so they can win in mortgage and real estate in 2023. We'll see you again next week.